This class is going to be a general purpose class where I go over a bunch of everything. It gets boring for me to go over the same things each day or same topics. So on the general classes, I'm just going to hit some things that I look at to try to find trades each day. I'm going to bring up the FX total view, which is our hot list, which gives you a wealth of information. I'll briefly go over what each of the things are. The MA field tells you if a currency is above its 10-day, 50, 200, and also 20-day moving average, it's dark green. Any currency that's super weak is below the 10, 20, 50, and 200-day moving average. So the dollar CAD is the weakest, New Zealand yen, Australian dollar, New Zealand dollar, and Australian yen are the strongest ones. And currencies above their 20, 50, and 200 are light green, and currencies below the 20, 50, and 200 are light red. This is a daily, weekly, monthly trend, very similar to what you see underneath the chart. It allows you to, for instance, sort by the strongest weekly currencies. These are the ones that you want to be looking for buys today for the most part. There are some rules, such as if a currency's been up or down, 3, 4, 5 days in a row, even though it's the strongest currencies, it's more likely to reverse. Trend zone uses the daily pivots. Above the midpoint, right above the pivot, trends typically happen on the upside. Below the midpoint, underneath the pivot, trends tend to happen on the downside. So if you want to find the currencies most likely to trend today, you can use this feature. This column right here shows up, down. Any currency that's been up or down 3+ days in a row is going to show up on here. Green is up, red is down. And if a currency's up 3 days, and I prefer myself 4 days in a row, it might also go up that day, but when it hits the upper containment bands, typically it's going to reverse. So today, the pound dollar was the only one that was up 3 days in a row. So let me just quickly go over this pound dollar chart. Exploded up yesterday, kind of went sideways for a while, and then broke out over yesterday's high. But notice there's not a whole lot of statistical strength. So at the 1.5 containment band, and I personally prefer the 2.0 white band, you can look for counter trend trades. And you can see that this one absolutely did reverse today. Typically, I will kind of watch and see what the momentum is. If it's going up to the upper band and then starts going below the couple bars low like this, I would be short right here, out with a small loss. Kind of comes up again. I'm going to really want to wait for it to go below this sideways rectangle low right here, so I would have been short around 59.12 with my stop right above the high, and you can see that pulled back with very nice amount of weakness and out of this trade here at 79 in at 12 for over a 30 pip win. And most of the time when price breaks from above to below the hourly, a lot of times it will do a retest, especially if the weekly monthly trend is up. And so when it comes back up and can't get above there, I'm looking to sell somewhere around 86, and unfortunately that one turned into a loss. Comes back to the previous day's high, can't break above it, which is a very good sign. You can see the statistical momentum on the way up is very little. Because this is up 3 days in a row, when it breaks down underneath the hourly, we're short here, and we just made a fortune on this one. We're short at 58.90, and it fell all the way down to 11. 80 pip move. And remember, underneath the lower containment bands, typically price will reverse, and it came down to Fibonacci level that I did last night, and that was the low of the day. With any kind of fib retracement or profit target outside of the white bands tends to be very strong support or resistance. Even with this amount of weakness, it double bottomed there and reversed up about 30 pips. If you were to do a counter trend trade at the bottom, having a range bar chart definitely helps. You can see it came down, rallied up, came down again. There's not that much weakness there. And so if you had bought this breakout right here with your stop a pip or two underneath this bar's low, you can see it went a few pips your way, came down, never stopped you out, and then proceeded to rally up another 20 pips. Now bringing back the FX total view. The next column should tell you if a currency is above the previous days, weeks, or months high, or below the previous days, weeks, or months low if you see it in red and it says less than low. Currencies that are above last week's high or last month's high obviously are much stronger. It's also reflected in the weekly and monthly trends being so strong. Now this column here, very powerful. It will show you the next 3 levels of support and the next 3 levels of resistance. One of the keys to trading is small losses, big wins. And so let's say you find a very strong currency. It's pulled back 25 pips from the high and it's losing downward weakness. You would look at the resistance and be interested in a trade that is at least 2 times, the next resistance area is 2 times farther away than what your stop is. If you're going to have a 10 pip stop, then you should see the next resistance area be at 20 pips or more away. And I show the next 3 levels of resistance. This one's 4 pips away, this one's 5, and this one's 5. You can sort this. In this case, the dollar Swiss, one resistance area is 23 pips away, then 30, then 38. So if this happened to be strong today and you're looking to buy it, there's a lot of room to run. It's kind of like having a freeway with no cars on it. You can drive really fast, assuming there's obviously no police to pull you over. But this is an open freeway where there's nothing to really stop your trade from going in your favor. Ideally, you want to find a strong currency that pulls back to a support area, and I like support and resistance clusters, which means there's 2 or 3 areas, in this case 4 pips down, 5 pips down, and 11 pips down. The CAD yen has major support underneath it. If the resistance area was 20 pips up and you got support very close underneath you, the trade's more likely to work. After that, we have the daily narrow range, which are no signals today. Anytime a currency moves very little the previous day, it's more likely to trend the next day. And then this column, which I don't use myself personally, but some of our longer-term traders and swing traders like it, are weekly narrow range patterns. Anytime currency has a very narrow range for the previous week, it tends to trend more. And you can see that happen this week in the euro dollar. Here's the euro yen. We have 2 major counter trend signals. The big yellow dots are usually the end of the move. We have my Fibonacci profit target level up here. And when these levels, like I said earlier in this video, when these levels are outside of the white containment bands, typically they are the end of the move. And especially when you get a double top pattern like this, you can go short, small break even or 5 pip win, short again, small win, and you can see it continued down. Notice pound yen also above the upper containment band. This was the end of the move, and it had a pretty violent move down. I had the fib levels on here from a Forex blog class today. You can see it fell with incredible weakness, rallied back up. I like to sell the 50 and 62% retracement, and when the momentum on the way up is half of what the down momentum is, very high probability trade. And again, extreme weakness, this little pullback right here. If you bring up a range chart, it gives you added benefits down at the bottom. Notice explosive move down. This is a build your own trend tool, which allows you to use our best statistical trend tools on range charts. And you can set them up to be any amount of weighting you want. I have 15% weighting on 5-minute trend candles, 15% weighting on our power index with the 15-minute bar 20-period average. I'm not using the hourly. 3x3 power index, 10% weighting, 15% on the Fisher, and 15% and 30% on 2 statistical intensity tools. I like to give anywhere from 40 to 50% weighting to tools that measure intensity. It's nice if 100% of pound pairs are going down and yen pairs are going up, but if they're doing so with mild intensity, then I don't want to see a reading at and above the 80 level. I want to see something like this. And so by weighting the intensity of trends, you can get nice patterns that show extreme weakness on the way down, no weakness or no strength on the way up. That trend's very likely to continue, and it does. Extreme weakness on the way down, almost no strength on the way up, and that trend continues, as you can see. Watch our videos on the 3.0 containment bands. This I have on my charts as green. Typically I don't use the 1.5 bands that much. I mostly use the 2.0 white bands and the 3.0 green bands. Price rarely goes below the 3.0 band. So if you see a weekly, monthly trend that's up and comes down there, you might want to do a little quick counter trend trade down there. If I see any more charts up with the 3.0 containment bands, I'll review those today. Here's a good decent trade. The weekly trend's down, the monthly trend's down. The dollar CAD exploded up, went above the upper containment band, ran out of steam. There's a 10-day moving average, the previous day's high, a monthly pivot level up here. And again, the 2.0 white band, when the weekly monthly trends down, when it goes above there and comes back down, usually you can go short right here at 83, and you can see it pull all the way down. You're still in this trade, but you've locked in almost, a little bit more than 20 pips. Notice my Fibonacci profit target level. If the weekly monthly trend were down, this would be an amazing place to sell. Again, counter trend, big yellow dot signals at the upper bands. Usually it's a nice reversal signal. You might have had a small loss here, and then a nice 20 pipper if you held all the way down to the lower bands, a 40 pip move. Double tops are frequently the end of trends, and especially when you have significantly less momentum than the first wave up. And I find that double tops separated by at least 2 hours tend to be a much bigger predictor of trend reversal. Another thing that I oftentimes take as far as trades is when the market comes above the previous day's high and then it goes underneath there, I tend to take trades like that. In this case, the first one was a loss. When it went underneath this the second time here at 22, you can see it almost closed above the trailing stop, but it didn't, and then the market shot down about 50 pips. It's not the highest winning percentage system in a row, but it oftentimes finds these explosive counter trend moves that there's no real way to predict. You did kind of see that there was a lot of weakness there, followed by almost no strength. So if you did get stopped out of this trade, you would have had to re-enter. And again, even if you had 2 small 5 and 10 pip losses in a row, and then you make 40 pips, you recovered your losses on one trade. You can be 1 out of 3 winning and still make money by catching these big wins.